when Chandra, the chairman of Tata Sons, had shared the vision of Tata Motors becoming net debt zero by FY25, the conditions were very different. Your CV portfolio was not that strong, JLR operating leverage had not kicked in, the PV market share was not that great. Now everything's are firing full cylinders. So will it be safe for me to assume that your guidance of net debt zero by FY25 should be met earlier than what you'd projected?
Let's give it another quarter before I can confirm from a JLR perspective. But I think for now, it's safe to assume it's FY25, and rather than bringing it earlier than that, let's execute.
I am
Obviously, a
thinking
pleasant
on
surprise
those
is always
lines.
welcome.
Now, if I'm thinking on those lines, I will not be incorrect, because when you guided versus what the situation is, there is a marked improvement in operating leverage and financial leverage.
That's correct. So therefore, I'm not saying no to it. All I'm saying is that right now, let's hold the guidance and deliver. Everybody loves a pleasant surprise. Let's deliver that surprise rather than getting ahead of ourselves.
Balaji, this question I've always been wanting to ask you. And if I look at, let's say, the P multiples of passenger car in India, let's say Maruti and Mahindra, the P multiple of CV business in India, Ashok Leyland and others. And if I look at the P multiples of luxury cars globally, BMW, Volkswagen and Audi, they are strikingly higher than what Tata Motor currently has. Would you be tempted to unlock some of these business separately now that all businesses are settled? They don't have to support each other. They don't have to overlap on each other.
For us to give clarity on this is why we split the EV and PV business, so that it's giving full clarity. Second, we also said we wanted to subsidize the PV business so we give full visibility of the P&L of PV and make it fully independent. I think we've done all those. In terms of unlock by any corporate action on that, I think at an appropriate time the board will decide if it is worth doing it. And right now we have no such plans.
Okay. Balaji, just to wrap it up with one final question, I know I've extended my appointment with you, is the fact that the Tata Group is now setting a large battery manufacturing unit in UK. And battery component is the most important component for any electric vehicle. How advantageous would that be? And could there be a permanent decline in the EV operating costs for Tata Motors, because you will have your in-house battery expertise, which no other car company in the world will have? And that is something which will have very strong, far-reaching impact whenever the plant is ready?
You're absolutely right. And that's the reason why we did it the way we did it. Where we had to ensure the OEM investing was out of question because the balance sheet is not strong enough. And more importantly, if you have to supply to other players, being an OEM, you will never be able to supply to other players. So you can't build scale. So keeping it within the house, so to say, is an important and differentiator and a very core ecosystem build, because we'll be the only player in the world where we should be having a very transparent joint business planning between the OEM and the cell manufacturer, which means we should have full visibility on what are the chemistries that are available, therefore, which is the chemistry that we should be experimenting as an OEM, and what are the chemistries that they should be tying up as a battery manufacturer. Just an example. Or what should be the form factor that maximizes productivity at the cell manufacturing, which will also help me in structural design of the vehicle. Second possibility. Third possibility, what should be the volumes that I should be tying up for various materials that we cut over so that it's fully consumed on this end, so that the risk goes down. If you notice in all of this, there's a theme that is emerging, which is the right experts managing their risks means overall systemic risk goes down, and opportunities in terms of creative execution actually goes up. That's what we are playing for. And it also means that some of the technology investments that are happening everywhere in the world, the cell manufacturing company has the ability to dip into it. And it is also ensuring it is doing it in a manner that the current manufacturing technology is resilient to those changes in chemistry that happen. And that form factor is appropriate for the car manufacturers. So if you see this full ecosystem that we have put out there, we believe it is giving us strategic flexibility and at the same time reducing risk. At the same time, right guys are controlling the right capital. That is a potent combination that is there. And that is what we want to play going forward. And you roll forward into 26 and beyond, you'll soon realize that securing supplies is pivotal for successful launching of cars, which is what we have done. At the same time, you'll also realize it can't be any battery. Power is a very important aspect of it. Securing power sources becomes important. Making it green power is important. Securing mineral sources is important. So if you notice that the entire back-end value chain risk is now being given to a company that is going to do it as a day job every day, while the OEM can focus squarely on the customer. This is a significant differentiator that we would have, and that is something that we intend to leverage to the hilt, both in the OEM and in the battery manufacturing process.